Swayam Prabha. Digital India. Educated India.
Yoga Karmasu Kaushalam.
Hello friends, I am Professor Dr. Himesh Doshi from PD Pandya Commerce College affiliated with Gujarat University, Ahmedabad. Joint venture accounts. When a separate set of books is not maintained. Dear friends, in the previous session, we solved some more questions on the same method when a separate set of books of account is not maintained in the firm's books. Discussed how to find the valuation of closing stock considering direct expenses. In this session, we will discuss meaning of memorandum joint venture account, features of memorandum joint venture account, how the memorandum joint venture account is prepared, how other co-venturers accounts are prepared when the memorandum method of joint venture account is adopted, practical problems of the memorandum method. Let us first discuss the meaning of memorandum and its features. The word memorandum is used because it is a nominal account prepared by one or all co-venturers just to find profit or loss of the joint venture business without following the double entry system. Each co-venturer sends a statement of transactions taken place by him for the joint venture to the other co-venturers periodically, based on which each co-venturer prepares the memorandum joint venture account. Just like as first method, under this method also all expenses paid by co-venturers are debited and sales and disposal of closing stocks are credited to the memorandum joint venture account. Let us see the key features of memorandum joint venture account. Individual records. Each co-venturer keeps their own record of transaction related to the joint venture in their personal accounts. The transaction done by other co-venturers will be ignored. Combined accounts. A memorandum joint venture account is prepared to summarize the transaction of all co-venturers relating to expenses and revenues. Transaction done by co-venturer among themselves, including cash received or paid by one co-venturer to another, will be ignored at the time of preparation of memorandum account. Profit and loss determination. The balance of the memorandum account represent the profit or loss of the joint venture. No double entry. This account is not a part of the regular double entry system. So, the word memorandum is used. Profit sharing. The profit or loss calculated in the memorandum account is then distributed to the co-venturers based on their agreed profit sharing ratio. Now, let us understand how the memorandum joint venture account is prepared with an example of illustration number 9. Hari and Giri were partners in a joint venture sharing profit and losses in the proportion of 3/5 and 2/5 respectively. Hari supplies goods worth rupees 20,000 and incur freight charges of rupees 1,000. Giri also supplied goods worth rupees 16,000 and incurred rupees 500 towards freight and other incidental charges. Giri sells the entire stock of goods on behalf of the joint venture for rupees 50,000. Giri is also entitled to commission of 5% on sale. Prepare memorandum joint venture account in the book of Hari and Giri. It is important to note that the memorandum joint venture account will be prepared by Hari or Giri or both co-venturers in their personal books of accounts in the same manner as well we were preparing in previously. The only difference between the joint venture account and the memorandum joint venture account is that the memorandum joint venture account is a summary of all expenses and all revenue without following the integral double entry system. Let us see how the memorandum joint venture account is prepared in the books of Hari under the memorandum method. In the book of Hari. Now, Hari and Giri were partners in a joint venture sharing profit and losses in the proportion of 3/5 and 2/5 respectively. Hari supply goods worth rupees 20,000 and incur freight charges of rupees 1,000. So, in memorandum joint venture account, goods sent by Hari rupees 20,000 and expenses paid by Hari rupees 1,000. Same way, Giri also supplied goods worth rupees 16,000 and incurred rupees 500 towards freight and other incidental charges. So, this amount also debited in memorandum joint venture account to goods sent Giri rupees 16,000 and expenses paid Giri rupees 500. So, total goods sent amount will be 36,000 and total expenses paid rupees 1,500. Giri sells the entire stock of goods on behalf of the joint venture account for rupees 50,000. So, sales will be on credit side by sales rupees 50,000. Giri is also entitled to a commission of 5% on sale. Here total sales is 50,000 at the rate of 5% commission. So, commission will be 2,500. So, in memorandum account debit side to commission account rupees 2,500. Now, we would like to close this memorandum account, make total on both sides. So, total on credit side is more. So, first we would like to put 50,000 on both sides. There is a difference on debit side, that is rupees 10,000, it is known as a net profit. This profit will be apportioned among Hari and Giri in the proportion 3:2. So, Hari will get rupees 6,000 and Giri will get rupees 4,000. Now, let us see how Giri account will be prepared in the book of Hari. Giri's account on debit side, to cash goods sent rupees 20,000, to cash expenses paid rupees 1,000 and profit rupees 6,000, total amount 27,000. So, it will be on credit side by cash balance amount received rupees 27,000. It is important to note that under the memorandum method, each partner records transaction taken by him and his profit share only in the other co-venturers account. Here, Hari will record only those transactions that took place by him in Giri's account by debiting all payments made by Hari for the joint venture and Hari's profit share, while Giri's account is credited for sales made by Hari. The other notable point is that Giri's account is prepared in the opposite manner than how it is prepared following the double entry method. Under the double entry method, only Giri's transactions are recorded in Giri's account by Hari, while under the memorandum method, Hari records only his transaction in the book of Giri. Now, let us see how the memorandum joint venture account and Hari's account will appear in the book of Giri. In the book of Giri, memorandum joint venture account, now on debit side, to goods sent by Hari rupees 20,000, by Giri rupees 16,000, total amount 36,000. To expenses paid by Hari rupees 1,000, Giri rupees 500, total 1,500. By sales, Giri rupees 50,000. It is on credit side of memorandum joint venture account. Now, 5% commission will be given on sales to Giri. So, 50,000 multiplied by 5% commission, amount will be 2,500. This amount will be on debit side of memorandum joint venture account. To commission account, Giri rupees 2,500. Now, make total rupees 50,000 and there is a difference on debit side rupees 10,000. This is known as net profit. This profit will be apportioned among Hari and Giri in the ratio of 3:2. So, Hari will get rupees 6,000 and Giri will get rupees 4,000. Now, Hari's account, come to debit side, To cash account, goods sent rupees 16,000, to cash expenses paid rupees 500, to commission rupees 2,500, to profit rupees 4,000. Now come to credit side. By cash, sales rupees 50,000. Close this account, total is 50,000. There is a difference on debit side rupees 27,000. To cash, balance amount paid. You must have observed that as Hari records only his transaction and his share in profit in Giri's account, while Giri will record only his transaction and his share of profit in Hari's account, and balance amount due remain the same. You must have also understood that the memorandum method focus on recording individual transaction by each co-venturer and then using a separate memorandum account to determine the overall financial outcome of the joint venture without the complexities of full integrated accounting system. Let us solve one more question of the memorandum method by the illustration number 10. C of Calcutta and D of Delhi entered into a joint venture for the purpose of buying and selling second hand motor car. C makes purchase and D to sale. The profit and loss was to be said as 2/5 to C and 3/5 to D. Purchase 12 cars by C for rupees 12,000 each, rupees 4,100 for their reconditioning and sent them to Delhi. His other expenses were buying commission 2.5% and insurance rupees 2,300. D took delivery of the car by paying rupees 2,000 for railway freight and rupees 1,600 for octroi. He sold 4 cars at rupees 20,000 each, 2 at 18,000 each and 3 at 17,000 each, sundry expenses rupees 2,300. 2 cars were damaged by an accident and he received an insurance claim of rupees 20,000. He retained the remaining car for himself at an agreed value of rupees 15,000. His expenses were insurance rupees 500, garage rent rupees 2,400, brokerage rupees 3,000, sundries rupees 4,500. Each party's ledger contain a record of his own transaction on a joint account. Prepare memorandum joint venture account and the account of the other venturer in each party's ledger as it will finally appear, assuming that the matter was finally settled between the parties. Now let us see how the memorandum joint venture account and D's account will appear in the book of C. In the book of C, memorandum joint venture account. C of Calcutta and D of Delhi entered to a joint venture for the purpose of buying and selling second hand motor cars. C to make purchase and D to effect sales. The profit or losses was to be said as 2/5 to C and 3/5 to D. C purchased 12 cars for rupees 12,000. So, this amount will be on debit side of memorandum joint venture account to purchase by C 12 cars at the rate of rupees 12,000, total amount 1,44,000 on debit side of memorandum joint venture account. Paid rupees 4,100 for their reconditioning and sent them to Delhi. This is expenses paid by C. So, on debit side of memorandum joint venture account, to expenses paid by C, reconditioning rupees 4,100, commission rupees 3,600, sundry expenses rupees 2,300. So, total expenses paid by C rupees 10,000. D took delivery of the car by paying rupees 2,000 for railway freight, rupees 1,600 for octroi. He sold 4 cars. So, here expenses paid by D to expense account railway freight rupees 2000, octroi rupees 1600. Then more expenses also paid rupees 2300. He sold 4 car at rupees 20,000 each, 2 car at rupees 18,000 each and 3 car rupees 17,000 each. This amount will be on credit side by sales D. 4 cars at the rate of rupees 20,000 is equal to 80,000. 2 car by rupees 18,000 is equal to 36,000. 3 car by rupees 17,000, total 51,000. So, total amount 1,67,000. This is on credit side of memorandum joint venture account. Now, expenses paid by D, that will be on debit side. So, here 2,000 by railway freight, octroi rupees 1600, insurance rupees 500, garage rent rupees 2400, brokerage rupees 3000 and sundries rupees 4500. Total expenses paid by D rupees 14,000. This amount will be on debit side. Now, insurance claim by insurance claim D rupees 20,000 and closing stock taken by D by closing stock rupees 15,000. Make total on credit side rupees 2,02,000. There is a difference on debit side 34,000. This is known as the net profit and this profit will be apportioned among C and D in the ratio of 2:3. So, C will get profit 13,600 and D will get 20,400. Now, D's account. So, in D's account debit side to cash purchase rupees 1,44,000, to cash expenses rupees 10,000, to profit by C rupees 13,600, total 1,67,600. On credit side there is a difference 1,67,600 by cash balance amount received. Here important point is the abnormal loss of car rupees 4,000. Only the claim received from the insurance company is credited to the memorandum joint venture account. The amount of abnormal loss will not be recorded separately in the joint venture account, or memorandum joint venture account is a combined account of trading and profit and loss account, and abnormal loss is absorbed by the joint venture account or the memorandum joint venture account itself. Hence, cost of the damaged car is debited when purchases and expenses are recorded and the insurance claim received is credited. So, the difference amount of loss remains debit side of the joint venture account or the memorandum joint venture account. Now, let us see the memorandum joint venture account and C's account in the book of D. In the book of D, memorandum joint venture account. Now, come to debit side. To purchase by C 12 cars at the rate of rupees 12,000, total amount 1,44,000. Expenses paid by C to expenses reconditioning rupees 4,700, commission rupees 3,000, insurance rupees 2,300, total amount 10,000, that will be on debit side of memorandum joint venture account. Expenses paid by D. To expenses paid, railway freight rupees 2,000, octroi rupees 1,600, insurance rupees 500, garage rent rupees 2,400, brokerage rupees 3,000 and sundries rupees 4,500. Total 14,000 paid by D. This amount will be on debit side of memorandum joint venture account. Now, come to on credit side. By sales D, 4 cars at the rate of rupees 20,000, total amount 80,000, 2 cars by rupees 18,000 each, that is 36,000, 3 cars at the rate of rupees 17,000 each, total 51,000. So, total amount will be on credit side 1,67,000. Now, claim by insurance company, claim by D rupees 20,000 and by closing stock taken over by D rupees 15,000. make total on both side rupees 2 lakhs 2000. There is a difference on debit side rupees 34,000. This is known as a net profit of memorandum joint venture account. This profit will be apportioned among C and D in the ratio of 2:3. So, C will get 13,600 and D will get 20,400. Now, C's account. On debit side, to cash expenses paid by C rupees 14,000, to profit rupees 20,400. Come to credit side. By cash, sales rupees 1,67,000, by cash insurance claim rupees 20,000, by closing stock rupees 15,000. Make total on both side rupees 2 lakhs 2,000. There is a difference on debit side 1,67,600. So, to cash balance amount paid. I think you must have understood how the memorandum joint venture account and co-venturers accounts are prepared. Before concluding this, let us see one more question of preparing the memorandum joint venture account. Illustration number 11. Satish and Sunit made a joint venture of underwrite the subscription at par of the equity share capital of Ecosystem Limited consisting of 2 lakh shares of rupees 10 each. They agreed to pay all expenses up to the allotment of shares. They agreed to share profit or losses in the ratio of 3:2. The consideration in return for this underwriting was allotment of 10,000 other shares of rupees 10 each at par to be issued to them fully paid. Satish provided for rupees 21,000 registration fee, rupees 11,500 advertisement, rupees 7,500 for printing and distributing prospectus and rupees 4,000 for printing and stationery. Sunit paid rupees 6,000 for office rent, rupees 25,000 as legal charges and rupees 10,000 salary of clerk. The issue fell short by 15,000 shares. Satish took over this share by paying for the same in full at par. He sold the entire holding at rupees 15 per share net. Sunit sold the 10,000 shares allotted as consideration at rupees 14.50 net. Preparing memorandum joint venture account and Sunit's account in the book of Satish and memorandum joint venture account and Satish's account in the book of Sunit, assuming they settle their accounts. Let us see how the memorandum joint venture account and Sunit's account will appear in the book of Satish. In the book of Satish, memorandum joint venture account. Now come to debit side, memorandum joint venture account. To expenses paid by Satish, registration fee rupees 21,000, advertisement rupees 11,500, printing and distributing rupees 7,500, printing and stationery rupees 4,000, total 44,000. Sunit paid expenses, office rent rupees 6,000, legal charges rupees 25,000, salary rupees 10,000, total 41,000. So, total expense is 44,000 by Satish and 41,000 by Sunit, total 85,000 will be on debit side. To purchase of share, Satish purchased 15,000 share at the rate of rupees 10. So, 1,50,000 will be on debit side. Now, come to credit side. By sales of share, Satish 15,000 at the rate of rupees 15, that is 2,25,000. Sunit 10,000 at the rate of 14.5, so 1,45,000. Total amount 3,70,000 on credit side. Make total on both side 3,70,000. There is a difference on debit side 1,35,000, that is the net profit. This profit will be apportioned among Satish and Sunit. So, Satish will get 81,000 and Sunit will get 54,000. Sunit account on debit side to cash expenses paid 44,000, to cash purchase of share 1 lakhs rupees 50,000 and profit on debit side rupees 81,000. Credit side by cash sales of shares 2 lakhs 25,000. Now make total on both side 2 lakhs 75,000. There is a shortage on debit credit side rupees 50,000. By cash balance amount received. Now let us see how the memorandum joint venture account and Satish account will appear in the book of Sunit. In the book of Sunit, memorandum joint venture account. Come to debit side, 2 expenses paid by Satish, registration fee 21,000, advertisement expenses 11,500, printing and distributing charges 7,500, printing and stationery rupees 4,000, total 44,000. And expenses paid by Sunit, office rent rupees 6,000, legal charges rupees 25,000, salary rupees 10,000, total amount 41,000. Now total of 44,000 plus 41,000, that is 85,000, it is on debit side of memorandum joint venture account. Next, the purchase of shares by Satish, 15,000 shares at the rate of rupees 10 purchased by Satish, this amount will be on debit side of memorandum joint venture account rupees 1 lakhs 50,000. Now come to credit side. By sales of shares, Satish rupees 2 lakhs 25,000, 15,000 share at the rate of rupees 15. Sunit 1 lakhs 45,000, 10,000 shares at the rate of 14.5. So total sales will be 3 lakhs 70,000 on credit side. Now make total on both side 3 lakhs 70,000. There is a shortage on debit side 1 lakhs 35,000, that is net profits. This profit will be apportioned among Satish and Sunit. So Satish will get 81,000 and Sunit will get 54,000. Now come to Satish's account. On debit side, to cash expenses paid 41,000, to profit share 54,000. On credit side, by cash sales of share 1 lakhs 45,000, total 1 lakhs 45,000 on both side. So there is a difference on debit side rupees 50,000, this amount to cash balance amount paid. You must have noticed that there is no difference in the preparation of memorandum joint venture account and joint venture account. The reason is that all expenses incurred by both co-venturers are debited and all income received by both co-venturers and closing stock taken over are credited based on periodical statement sent by co-venturers regarding their transaction to each other. Let us conclude the session. In this session, we discussed meaning of memorandum joint venture account, features of memorandum joint venture account, how the memorandum joint venture account is prepared, how the co-venturers account are prepared when the memorandum method of joint venture account is adopted, practical problems of the memorandum method. Friends, we have completed the first method, which is when no separate accounts for joint venture are maintained. In the next session, we will discuss the second method of joint venture accounts when separate books of account are opened for joint venture. Revision is desirable to acquire a good understanding. Keep on revising and wait for the next part. Thank you.